Hey guys and girls, welcome to a new GoTax information segment for individual taxpayers just like you. So get smart with GoTax. Well, no doubt you've all heard of salary sacrificing your superannuation. Well, is it of benefit and how does it work? First of all, what we are doing is sacrificing and foregoing some of your wages to increase the level of your employer superannuation contributions. So, by way of example, let's say you want to increase your superannuation by $5,000. Then, as the name implies, you'll be sacrificing $5,000 of your salary. If you were earning $60,000, now you'll be paid on a salary of $55,000 with the $5,000 difference going into your super. Hopefully that didn't confuse you. So what are the advantages of that? Firstly, it's a form of forced savings. If you don't get to see it in the first place, chances are you won't miss it. Secondly, you do get a tax benefit. Tax system is a marginal tax system, which means that different levels of income attract different tax rates. And in this instance, it can be used to your advantage. A super fund is taxed at 15%, and the marginal rate of tax on a $60,000 salary is 32.5%, plus the Medicare, which amounts to a total of 34.5%. That means in your hands there is an additional 19.5% from which your superannuation can invest with. So if we look at the after-tax effect, that is what you get in your hands, then at a salary level, the $5,000 will be taxed at 34.5%, so you're left with $3,275 to spend. Or if your superannuation gets the money, then the $5,000 will be taxed at 15%, so the super fund is left with $4,250 to invest with. So in this example, you've actually gained $975 without any effort, and that's not a bad deal. But as with anything that has advantages, there are also disadvantages. So what are they? What are the disadvantages? You might need the money to live now. So salary sacrificing could impact on your ability to fund your day-to-day expenses. And you tie your money up until retirement age, so you can't get it until you hang your boots up. Now let's put all that into context. A one-off salary sacrifice amount of $5,000 gives your fund $4,250 to invest. If you have 30 years to retirement and your refund returns an after-tax return of 5%, then it will add a whopping $18,368 to your retirement nest egg. And that's only for this one-off sacrifice of $5,000. It will compound if you do it for more than 1 year. So we hope that gives you a little insight into superannuation salary sacrifice. Now don't forget, this is an example. Everyone is different. So go see some smart people before you undertake anything similar to this. Hope you're informed. Signing off on Get Smart. Bye.